Finally, the time has come. Palantir will go into the S&P 500 index. Now, how did they do that? Well, special message from Alex Karp.
On Friday, Palantir was admitted to the S&P, which is an enormous, momentous occasion for every Palantirian. And how did we do it? We built the best products in the world. We built the best products in the world. We built the best products in the world.
Palantir right now has a market cap of $78 billion. The cost per share will be $34.66 at the time of making this video. The price is after hours. Year to date, the stock is up over 100%. In the last 3 months, the stock is up close to 50%. And year over year, the stock is up 120%, which means that currently it trades at a forward PE of 88 times, which is very close to its 5-year mean. Yes, imagine that. Being at 88 times and still being under the 5-year mean. But of course, we know previously Palantir was not profitable. EV to EBITDA, same story. Price to sales is already quite higher, 25.8 times compared to 17.9 times. Price to free cash flow, 112.1 times compared to the 5-year mean of 116.8 times, and a price earnings to growth of 3.66. Now, I'd be lying if I was saying that, oh, this sounds extremely attractive right now, right? No, it's expensive. Based on what we know currently, the previous earnings report, and the guidance, it's expensive. But if they manage to continue to accelerate revenue, if they manage to raise guidance yet again, then maybe the picture will change. Or, as I've showed you yesterday, free cash flow can stay flat for the next 4 to 5 years. And the value per share, if you do a DCF, I showed it, maybe I'll show it again on the screen here. Amir did it. He showed me basically free cash flow stays flat for the next 4 to 5 years. The result of the fair value that you're getting, the value per share that you're getting, was around 13% lower than the price we're at today. That's with free cash flow not growing for 4 to 5 years. Why? Because all the value is terminal for Palantir. Yes, it's a company that's 20 years old, a little bit more than that. But for what Palantir is today and what Palantir will be in the future, we are still early. Now, of course, being worth $78 billion, you're still early. What are you talking about? Yeah, I know it's already a huge, huge company, not a cheap one either. But for where the company is going, I think $78 billion will look quite small in the next 10, 15 years or so. Because Palantir does touch a lot of industries that are huge, multi-trillion-dollar industries, hundreds of billions of dollars industries, commercial and government. Don't forget about government, because I do think that that's going to be quite a big growth driver in the future. Remember, the Department of Defense spent on AI software is still super, super small compared to, well, the $800, $900 billion budget, the yearly budget, shall I say? So, yeah, Palantir being Palantir, I think they'll benefit quite a lot from that. Anyways, let's discuss a couple of things. Why is it important that Palantir is in the S&P 500 plus AIPCon? AIPCon 5, so my prediction thing in the last video was correct. It was a teaser for AIPCon Thursday, I believe 1 p.m. or a little bit before 1 p.m. Eastern time. And I do think that Amit might be presenting. Maybe, maybe not. I guess you'll have to tune in. So Palantir reveals new wave of customers in action at AIPCon. More than 100 organizations will be at AIPCon, including many customers who are demoing and speaking publicly about their work for the first time, including the National Geospatial Intelligence Agency, Aramark, BP, Associated Materials, Lear, Trinity Industries, and Anduril. I really hope that Parma Lucky will be tomorrow at AIPCon. That could be great. DTN, Ellis Dunn, Department of State, L3 Harris, Owens and Minor. So Quite some big companies, more than 100 organizations will be there and will demo some stuff. Apparently, there's going to be a couple of drone demos at that event as well. Now, continuing on that small reminder stuff I said before, Palantir total customer count sits at 593. 593 overall. That's not a lot, right? That's not a lot. That's why I said it's still early days. And yes, you can see your total commercial count and US commercial count as well. It's still early days. Yes, it's worth close to $80 billion in market cap. Yes, the stock is expensive, but this is just the start. Anyways, before continuing, why is it important to go into the S&P 500? What are the benefits of that? Let's discuss that in just a second. If you enjoy this type of videos, like, comment, subscribe, hit all the buttons. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So a couple of points here. One, being part of the S&P 500, a widely recognized benchmark index, gives a company greater visibility and prestige. This can attract more attention from investors, analysts, and the general public. Hopefully, finally, we're going to get more than 2 analysts on the earnings call. Many investment funds, such as index funds that track the S&P 500, are required to purchase shares of companies included in the index. This increased demand for the stock can drive up its price. The S&P 500 is often used as a benchmark to measure the performance of the broader stock market. Inclusion in the index can give a company's stock a more prominent position in the market. Many institutional investors, such as pension funds and mutual funds, invest in the S&P 500. Inclusion can lead to increased institutional ownerships, which can provide stability to the stock price. Last thing here, companies that are part of the S&P 500 may be more attractive targets for acquisitions or mergers due to their increased visibility and market capitalization. Then historically, stocks that join the S&P 500 often experience a short-term price increase. Very important to know that this might just be a short-term increase, because we've seen this in the past. Stocks go up on the announcement, and then after the inclusion, it goes down. Now I want to read what Ted here said. Ted is the global head of commercial at Palantir Tech. Why the S&P 500 matters to us. Being accepted into the S&P 500 has been an internal goal we have been driving for over the last several years. While the short-term stock price action is a nice validator, the more important reasons reinforce that Palantir is an institution that is here to stay. Our customers count on our software to be the foundation of their future competitiveness. We have to earn the right to play that role every single day through the software we deliver. However, those customers also reasonably pay attention to signals that they count on us for the long term. These are not decisions they can make lightly. Executing our DPO, achieving consistent GAAP profitability, and being recognized as a pillar of the US economy in the S&P 500 are proof points for our customers' base that they can count on us in a material way now and into the future. There is nothing more gratifying than seeing customers that bet on us early pointing to this milestone as proof they were right. And I believe Alex Karp has spoken about this in the past, right? Being unprofitable and trying to convince huge clients, huge organizations to come and adopt your software, your solutions, sometimes it doesn't sit well, right? Then you go and show them, look, we are GAAP profitable, meaning financially we're quite stable. This is already a more convincing point. Plus now you can say we're also in the S&P 500, even better. So it could definitely help with the accelerated sales cycle. Of course, at the end of the day, it's the product, it's the software that works that will sell, right? Continuing here, of particular importance for Palantir is proof that our rejection of standard software playbooks can create an enduring institution. Our customers put a steep discount rate on the promises of software companies. They have largely been trained into assuming software companies are the adversaries. The financially engineered revenues of the provider are more important than the value created for the customer. Engaging with Palantir feels very different than engaging with the rest of the software industrial complex. We have built our company based upon a core principle of unabashed alignment with our customers. This model created many critics and many fans. The important question was, would it work? Now we're recognized in the world's premier peer group. We are here to stay and the future belongs to our customers. We've spoken about this In the past video, I also showed you an interview of the ex-CEO of BP talking about when he, well, basically used Palantir for the first time and why they bought 1% of Palantir after using their products. But this has been the thing in the tech industry, right? If software, if everything that they've been selling, the product, was so good, then the problem would have been solved a couple of years ago. Why would the account manager, the sales guy, right, account executive, whatever, why would they recontact you each and every year to try and upsell you another solution? I thought we already paid for a solution. Why do I need another solution? Right? It doesn't make sense. Palantir here, again, software that works. You have a problem, here is the solution. It doesn't work, well, then there is a problem. But usually, and this is why Alex Karp said, look, if you don't want to pay for the solution, go try the competition, and then come back to us when you finally figured out that, oh, actually, we paid for a couple of software solutions, one on top of the other. Everything became a little bit too expensive, and we still have a problem. So maybe we should try. Maybe we should try Palantir. And that's what we're seeing basically right now. Of course, with AIP bootcamps, things can go much, much quicker. And like I said in the past, I think now many companies are focusing on cost cuts. Many companies are focusing on becoming more digital, which of course leads to more cost cuts. Doesn't mean they will lead to layoffs. No, it means that you can do things faster with fewer resources. We're talking about government, talking here about commercial as well. This is where Palantir comes in. I'm repeating myself again and again. I think we're still early. Of course, execution is key, but so far, they've been executing quite well. Mariana yesterday from Bank of America, where the price target is now at $50, said the following: joining the fellowship of S&P 500, key for institutionals. Last Friday, September 6, Palantir was among the companies set to join the S&P 500. This is going to happen basically Monday, September 23rd. We think that becoming a member of the S&P 500 could be highly beneficial to Palantir stock volatility. We think that the inclusion would attract more institutional investors, both passive and active. Beyond lower stock volatility, we view the inclusion as a watershed moment for institutional investors to revisit what they know about Palantir. From a fundamental perspective, we can explain the historically low institutional ownership by 1. DPO, that implies a less institutional ownership versus an IPO, and 2. The multi-class share structure. So why does it matter? Not because you're going to get a small short-term increase in the stock price. No, it's about the recognition. And for Palantir, a company like Palantir, that recognition, not just for being profitable, but for being in the S&P 500, is a big plus, a big growth driver in my opinion. Government, of course, in government, I think they're already quite well known, but especially for commercial. So, good things for Palantir. Stock is expensive, of course. You don't have to be a uber bull to notice that, yes, sometimes the stocks can be quite expensive, especially based on the numbers that we know today. So that's about it for me in this video. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.